lots of primary market action to focus on as well in today's session.
Indeed. So let's talk about Kross, a company that is in focus. It manufactures and supplies trailer axles and suspensions. Opens its 500 crore rupee IPO for subscription today. Will close on the 11th of September. We're joined by Sudhir Rai, who's the CMD of the company, to discuss the opening and strategies post their launch. From the 500 crore issue that you've launched, 90 crore is slated for debt repayment. So that leaves us with a two-part question. One, what is the current debt on books? And post this repayment, what will be the delta on your finance cost? Because that will then directly flow down to your bottom line.
Yeah, hi. Thanks. Good morning. So our total debt is 128 crores. This includes short-term as well as long-term. And we will be paying back 90 crores from our IPO proceeds and the balance amount. So there will be our cost of funds as of our last financials was about 2.2% of our top line. So this will have an effect of at least 1.5% on our margins.
Mr. Rai, good morning. Thank you so much for joining in. Congratulations on the IPO. And I'd like to ask you that you're planning on acquiring and on equipping your existing manufacturing facilities as well. Is there a Capex plan that you plan on incurring from that? And how do you plan on funding that Capex? And by when does all of this come on stream and the resultant synergies of that as well?
Right. So yes, we have plans for Capex also. We have a plan of 70 crores from the IPO proceeds to go into Capex. So we are now in this business of trailer axles and suspension, which is a new part which we have added just 4 years ago. And this very short span of 4 years, we have become a major player in this segment. So we would like to spend money on this in this particular segment. 30 crores of our 70 crores would go into the trailer axles and suspensions, where we plan to bring in newer technologies, technologies of extrusions, which are currently being fabricated in India. This right. not alone, we plan to spend about 22 crores in our forging setup, which will go into increasing the general capacities of our factory. And also in the exports, which we are also planning right now, we will be spending close to 18 crores in that segment.
All right. Just a question to understand how this will reflect in your revenues. The 70 crore Capex that you're doing, what are typically the asset turns across the capacities that you are, laying down? And as a result of which, what could the incremental revenues and revenue mix look like? Because you said that you are also increasing some capacity towards exports. Now that accounts for just about 1% of your sales. How much does that increase by going forward? So part one is increased asset turnover because of this Capex that you're doing. And secondly, export, how does that change?
Yeah, we have a very good asset turnover ratio of our factory. It's 3.5, 3.6x. Which is a benchmark, you could say, in any industry. And going forward, maybe a year, we will see a small dip. But otherwise, long term, we will continue to maintain such margins, such ratios. And
70 crore Capex that you're doing will give you additional revenue for close to around 200 crores, right?
70 crores Capex will allow us to grow for the next 4 to 5 years. Especially our main backward integration of extrusion, as well as from the forging capacities which we set up. We also plan to increase our foundry setup by putting up a second line. So going forward, we plan to grow in a similar trend which we have in the past 2-3 years.
Could you quantify that revenue potential, Mr. Rai, and also that 70 crore Capex that you're talking about? How would that reflect on your margins as well, once everything comes on stream?
So our current margins, our PAT margins are at 7.2. And this PAT margin also has grown sizably in the past 2-3 years. So going forward, we see the same growth in our PAT margins.
All right.
It is, yeah, please go ahead.
Yeah, I look at your margins. They've increased from what, 9 odd percent all the way up to 13% in the period that you've reported in your red herring prospectus. What are the other triggers for margins and what do they settle at? This is the EBITDA margin that I'm talking about. Can we look at somewhere closer to mid-teens? Because some of your peers are very close to that 20% mark as well.
Some are closer to 20%, some are closer to 5 also.
Right. So
And they
let's talk about where you would want to go then.
we don't want to go there. So margins, you see, if they keep growing, is because we are backward integrated in a very big way. Okay, we have a forging umbrella under us. We have now a foundry. We have all the machining operations, and we spend in manufacturing. This new technology of extrusion, which we want to bring in, is going to be the first of its kind in the country. And it will be a better technology. It will be a stronger product. It will be a more cost-effective product. So we spend money in technology, and that's how our PAT margins and margins grow year over year.
Clubbing two questions into one, Mr. Rai, due to paucity of time. Part one being, what is the kind of demand that you're currently witnessing across your business verticals? Part one, and part two is, almost 2/3 of your business comes from your top 5 contributors, top 5 customers. Is there a plan to bring that number down as well?
See, we are very happy with our customer base and how we have spread it out. Okay. We want to grow with each of our customers. And coming to your first question, what was it, please? Can you just repeat it?
I wanted to ask you, what are the kind of demand trends that you're witnessing across your business segments?
Yes, one or two demands basically which we are spending forward. One is on the exports, which I have not yet touched upon. We have tied up with 2 major export partners, and we see a big demand for auto components from the rest of the world. That is one aspect, and the demand within the country for the trailer segment is growing phenomenally. That is because there is a major shift from rigid vehicles to going to your prime movers. And this, all the OEMs also are aware of.
Right. Since you touched upon exports, Mr. Rai, very quickly, it's currently only 1% of your business. Would that go up to say around 5% or maybe even double digits, say in the next 3, 4, 5 years?
Yeah, 5 years, definitely it's more than double digits. Yes, that's what we do.
All right, Mr. Rai, we leave it at that. Thank you so much for joining in. Wish you good luck for your IPO. Looking forward to conversing with you on your listing day as well. That was the management of Kross. The IPO opens for subscription today.